Join us right now, though, with a look at the economy and his take on all that is going on. Former Treasury Secretary Steve Mnuchin, now founder and managing partner at Liberty Strategic Capital. Mr. Secretary, it is great to see you. We've been having a wide-ranging discussion all morning, including with Mike Johnson, about where we are, specifically where we are in the context of these tariffs. You were part of Trump 1.0. We're now in 2.0. Back in the day, you often talked about the stock market and looking at the stock market as a barometer of where things are. 2.0 is saying don't look at the market. There's bigger fish to fry down the road. What do you think of what's happening right now?
Well, first of all, it's good to see you. Look, I always said I was focused on the stock market longer term, not where it was on any day. And I do think the stock market longer term is a great barometer of the economy. I think Trump 2.0 has a lot of similarities to Trump 1.0. His focus on the economic issues are tax cuts, regulatory relief, and trade. And the president has always believed in adding tariffs. So I think that's what we're seeing in the market today.
Did you push back, though, on some of the tariff efforts in 1.0?
Look, I've been a believer in tariffs are important in getting people to the table. And there's no question if you take China, there's no question that the president's tariffs were the only reason they came to the table. I support the president putting another 20% to get them back to the table. They haven't lived up to the phase one trade agreement, and that should be the priority. And if they do, the tariffs can come off. And if they don't, I'm sure the president will add more tariffs.
What do you make, though, and what do you think the public should think about the uncertainty that all of this has clearly created within the economy? And you can look not just at the stock market, but so many different indicators where CEOs and others who I think people thought might be making investments are saying, you know what, hold on, we got to actually watch and wait and see what's going to happen before we do anything.
I think that people are overreacting a bit. So let me just start off with, this discussion around a recession. I don't think we're going to have a recession. I don't think the outlook looks like we're going to have a recession. And Larry Summers saying there's a 50% probability, I just don't agree with that. We've had a 5% correction in the S&P. We've had close to a 10% correction in the NASDAQ. Both of these indexes were at very high levels and had huge tech spending built into these. So I don't think anybody should look at what's a natural, healthy correction of these indexes as indicating that the economy's in trouble.
Steve, Mr. Secretary, I did not see everybody around the crypto summit. I don't know all who was there. I know the Winklevi were there. I know Sachs was there. I don't think you were there, but immediately, and I'm glad you're laughing because I'm laughing too. Immediately, these people on Twitter remember things. They remember our conversation where I said to you something about Bitcoin, and I go, oh, you're going to own it. And it was 2019. And I go, well, the Treasury's going to own it in 6 years. I just was like sort of just yanking your chain about whether you're going to load up on Bitcoin after you were Treasury Secretary. And I just want to get your comments now because it has come a long way, baby, at least from that conversation we had to a sovereign fund where people are maybe looking at ways of even adding to that. What's your comments on it now on Bitcoin?
I don't own any Bitcoin. I missed the rally in Bitcoin. There's plenty of other things that one could have bought that could have made a lot of money that I think if you hold
not
for
that
the next
much, not that much, unless you leverage the hell out of NVIDIA or something.
Well,
maybe NVIDIA.
I still look, as I've said, if people want to buy Bitcoin as an asset class, they should do that. I continue to be concerned about the issues of transparency in all these cryptos and making sure that we're fighting terrorist financing and making sure that we don't treat them like Swiss numbered bank accounts. But
store of value, Steve, do you buy it yet, like gold, digital gold, or still need some more proof?
I don't buy it as a longer term asset, but then again, I don't invest in gold either. I like owning stocks that generate earnings.
Right. Mr. Secretary, though, but let's go back to this reserve idea. My understanding is eventually the U.S. government is intending, I think, to ultimately buy more of this with its own with taxpayer money. No.
Well, I don't want to speculate what they're going to do or what they're not going to do. I mean, from my reading of the executive order, it actually was helpful to say they're not going to go out and spend taxpayer money to do that. They obviously have crypto that they've retained from various fines and other issues. I think, the gold is still there, by the way. I have no reason to believe that they've moved the gold since last time I checked on it.
Let me ask you a different question. Several of your former peers in your role signed an op-ed about a month and a half ago now, maybe a little bit longer even, about the way their concerns about the way DOGE and Elon Musk were going about their work. I think less about the work itself in terms of trying to actually find savings and more about the process. You did not sign that letter. Did you talk to them before they published that letter, and did you consider it?
I did speak to some of them. I didn't consider signing it. I have a lot of confidence in Scott and what he's doing. I think the letter kind of addressed certain issues at Treasury and what were the payment systems, and I'm comfortable with what Scott is doing and that the payment systems are secure. So, no, I didn't see a reason to sign that letter.
Mr. Secretary, what do you think about the tariffs, not in the tariffs themselves, but maybe more importantly, the back and forth with tariffs are on, tariffs are off, this negotiation that's taking place that has led to some concern from corporate leaders and potentially investors and consumers, too, just about the feeling of unease, not knowing what's happening and whether or not that could really put pressure on activity, corporate activity, on consumer activity?
There is no question that President Trump is trying to change the dynamic of trading relationships, and there's no question that he cares about the trade deficit, and he's focused on reducing the trade deficit both across the board and with specific countries. And that's a long-term change that he's focused on over the next 4 years. So I don't think people should be focused on this on again, off again. I think there's no question that there are going to be industries, let's just say the auto industry, which is a big focus of his. He wants more auto manufacturing in the U.S. And there may be issues along the way that impacts certain companies in the transition. But overall, I think if you step back and don't look at a specific company and you look at the economy, I think these are all moves that are going to be very good for the economy over the next 4 years. I was encouraged to hear the speaker say he actually thinks he could get a bill to the president by Easter. I mean, that's very aggressive. I do think getting the tax cuts on the agenda is an enormous priority.